Welcome to TradeTheMBI.com. This is John. This report is for the 22nd of March, and we continue to march on. Spring starts, and we've been making new highs from this range. Coming off that small dip reset to the algos, and then we've been proceeding along. Been a little bit of softness that developed when we started to see the steel coming down. Long-term buyers, though, had kept it. We'd almost reached that zero level. Now we're back over it. So again, posing the strength, and we expected like a dip here to the ABM yellow line, which is exactly what we got, and bounced right off of it. So it's a continuation of valuation change and expectation that there's still going to be continued growth. The Nasdaq's been far superior, even as it's still way underneath red, and now red, all the way above, right near that 7.5. It's pretty extreme. Setup reading. We talked about the bolstering of the euro was great support for the S&P and provided some of the catalyst that helps drive it. Not all of it, but enough. And the fact that we saw, again, crude oil draws, and then it's an indication that, perhaps some of this claim that economic growth is completely stalled, and that may have been more weather related as regular activity starts to resume. So we'll see if that trend holds steady. Gold still holding on to where it, after having reset itself slightly from it wasn't necessarily extremely overbought, but it was up there, and so it's smoothed out and still pretty close to the highs of the recent period, but with a much better looking DOC readings indicating that there's plenty of room capable for expansion to the upside here. So this was pretty straightforward when we started off on this run that began, we had a brief little dip. We started to get little buys. There was a little bit of an additional because this one just really didn't quite have the reset, and then we had the immediate rejection of cyan about to cross over green trying to cross above it. Green crosses above it, then you expect this one's going to take off, but immediately it did not do that. That happens. It made the brief dip and then produced pretty close to the same crossover buy setup here. This time they met with the slight completion, and there was a little bit of a rejection off of it, but the change in that DOC red angle was just like straight up, and it's one of those where, okay, you got pretty defined parameters at that particular point. It's a low risk trade because you've got just the distance between the 23 and the 0, and obviously at this point the ABM had already reset. And what we're looking at here is that Diocon Paint 2 set up the new adjusted one, and even further up it produced buys at the 76% with that P2X right there. And then a couple of warnings with a couple of the BK breaks where it was potential, but with this full reset of steel, there wasn't any configuration there that was going to give you a short spread under those two situations. I always look for it every time I get the steel cross. It's like, okay, am I going to get something? But no, I kept having rising red, even up at the peaks. Again, right here where we ended up with the break, but nothing but rising red again, and then started to roll over pretty significantly, and that actually produced a DOC spread where we were steel down near the -13. That's at least more attractive. Now, I'm not expecting a lot from this short, so this is one of those where, okay, I'm going to take the entry, but I know that I'm likely to see the potential of this turning around, so you tend to be a little bit more defensive on this play. And sure enough, once we crossed the steel right here, the 61% line, it was sort of one of those where I'm more inclined to take profit on those. I was willing to stick with it as long as the dip below the red line, but as soon as it converts, okay, I don't mind taking the gain. It doesn't necessarily make it a long at that particular spot. It just means there's a pretty good likelihood of a reversal. If I want to collect anything, then it's worth at least taking 3.5, 4 points versus 0, because that's exactly what happens as it turns around to give the full buy. Now, it may not produce the full buy, but if it doesn't, you can always add into the short. There's not a problem. But sure enough, turns to the green, right at the ABM level there, and it made cyan glow red, and boom, it just took off to all new highs and pretty much just floated sideways, and then we get a reset of the DOC at the highs, which means so you've gone from what some people might consider closer to overbought to completely not at the highs, and that's where we're at right now. We just had a little bit of a DOC spread right there. In this particular case now we have magenta still well under that 15. So we'll probably get a pop back up here, and we should probably see a revisit of at least the return back towards this 38% that's currently in place, which would be right in that 57 range. But all in all, very healthy and pretty easy to see within these markers. You'll find this lovely magenta pops up on that DOC spread, but again, the first thing I'm looking for is what kind of relationship do I have with my steel, and on those immediate turnarounds you kind of know that things are not going exactly. That doesn't mean you're not going to get caught on this one. It's just a question of, depending on if your stop is above the 100%, you still would have been able to get out clean on this one without any trouble. You might even been enticed again right here, because this is a very decent one as well. You've made lower shakeout readings on higher, so this should have broke down further. That it didn't just shows the incredible strength of it. You had then the cross of the red, and then going across here you had plenty of time to exit at the break even or whatever, knowing that it just wasn't doing well. That just means that the algo didn't have enough strength to drive away the amount of buying that was still taking place, and that's from behind the scenes standpoint. That's literally what's happening. It doesn't change that this wasn't accurate. It just means that there was more supply than they had anticipated as far as buyers, and they weren't strong enough to overcome it. So, and that put it right back up to the highs. So this is what to look for. It was interesting from a daily standpoint. I was looking at the MBI Opus. I think we reached all-time equity highs there. So that's the run that's been taking place. Profit factor and all that, the win rate still right near that 74%. It's been consistent for well over a decade now, so decade and a half actually, so can't complain about that from that standpoint. And for starting this year, not bad from a 9-trade standpoint for 2019, so no complaints with that one. From a 50K standpoint, I think there was the potential for some weakness when we had the initial dip here, but then we turned around to positive shakeout, and it went green all the way from there. First exit started right here, and that was down at the 2837, and boom, here we are all the way up at the 60 range. So great stuff. None of this was anything too particular. I talked about the long from before, and usually when we get that kind of a run up early on in the day, you tend to finish towards the highs, which is exactly what happened. In fact, we made new ones, so pretty consistent stuff. As always, though, I will put up anything that's relevant and keep updating you on any new developments. As always, trade well. We'll talk to you later.